Are we good?
Mm.
Hey, Rick McBride with McBride Realty Group. You were probably lately. Apologize. We've been over super swamp. Never apologize for that. Things are going good. We appreciate all your support. Was able to print out and go over and review the August market statistics that came out a couple days ago. These are put out by our MLS, MFR MLS, and they are a combination. So basically, these are statistics of everyone who's a member of the West Volusia Realtors Association. So the numbers have been released by the MLS, and the trends continue upward. No surprise there. The main cause of the trend is the lack of supply, and we have a steady growth of buyers. Not huge steady, but pretty much traditional, same amount of growth of buyers that we've experienced over the last 10, 20 years. Prices are up almost 15%, and at this time there's no end in sight. So the overall sales outlook is inventories remain super low in our market. I know the other day I did a search just in DeBerry. There was only 98 properties for sale in DeBerry. And sales volume is trending upward year over year. However, the last couple months, the sales volume year over year, month over month, has trended down slightly. So for instance, in June 2017 over June 2016, the sales volume, this number of units sold, has nothing to do with price, the number of units sold was up 1.73%. But in July, it was down 2.84%, and in August, it was down 4.97%, or almost 5%. Not really sure what that means month over month. Who knows one month over another month, what's selling and why it sells and what it did for that particular month. So a better snapshot of that is the year-to-date numbers. And year-to-date in June was 0.82%. Year-to-date in July, the growth of volume growth was 3.34%, and in August it was 2.57%. So what that says is that month over month we're trending down in volume, but year to date we're still trending up fairly significantly, 2.57%. So we'll need to keep an eye on that, because those numbers being opposed like that could signal a slowdown, a slight slowdown. I don't think so, but it could signal that. Unfortunately, we're probably not going to get much help with the September or the October numbers. Neither of those are going to be tell us much of anything, thanks to Hurricane Irma. You could see inventory coming off the market because it was damaged. You could also, which would mean less inventory, and you could also see less. You're absolutely going to see less closings, because when a hurricane comes through, any closing that was scheduled has to be delayed a week or two, because the appraiser has to go out and do a re-inspect to make sure there was no damage on the property. So we're definitely going to see a slowdown in September and October, although you may see an uptick in November to offset it. So ultimately, the only number that's going to mean much by the end of the year probably is the year-to-date number. One of the most telling indicators is the month's supply. 6 months supply is considered equilibrium. It's basically the number of houses on the market divided by the number that have sold in the last month. That number right now is 2.6. That's pretty steady over the last couple months, and slightly up over the last quarter, but not enough to be even significant. The most telling of these numbers, though, is equilibrium, 6 month supply, is not reached until 300,000. So anything under 200,000, properly priced and properly marketed, should sell relatively quickly. Not long ago, Sarah and I were just talking about, not long ago, it was 100,000 was where equilibrium was. Now we're up to 300,000. How far can it continue up? Only time's going to tell. The average sale price in our market increased to $199,514, so $486 short of $200,000, and that's up from $175,000 last year at this time. It's an increase of 13.9% and slower than prior months. We may be pushing the limits on pricing However, I'm saying we may be pushing the limits on pricing in this market, and homes are selling this last month sold for an average of 95% of asking price, which is down from 98 or 97 a few months ago. So all indications are that we've pushed this market to the brink for today, but it could just be, again, a consolidation period before it continues back up. It could not possibly continue up at 20% every month forever. That just can't happen. So summing it all up, all in all, inventories remain low, prices continue up, demand continues to inch up. Those three factors alone suggest prices should continue their upward trend, although not quite at this unsustainable pace we've witnessed in the past. We'll keep our ears to the ground, make sure you're up to date with the latest market statistics moving forward. If you want to get top dollar for your property, let our Masters Marketing Program